How many times have you seen something like this on YouTube? Somebody claiming to be a real estate expert walks through a new build community and shows you all the available signs. And then they claim this means builders have overbuilt and are in serious financial trouble. And since there are so many of these unsold homes, that means prices are going to tank and we're going to have a crash worse than 2008. Somebody is watching these videos because they get hundreds of thousands of views. But do they really believe this? Let's be realistic. If the builders weren't selling these houses, they wouldn't be building them. So I'm going to make it easy for you. I'm going to show you 3 graphs that prove beyond a shadow of a doubt that there will not be a housing crash. Ever since the Fed started raising interest rates, everybody from Wall Street to Main Street has been forecasting a recession or worse. Nobody thinks the Fed knows what they're doing, and the consensus is that interest rates have been too high for too long. Now, since this has been going on for 2 years now, I think it's safe to say that most have underestimated the strength of the overall economy. And for the most part, many won't even consider historical data that's older than 2008. You might want home prices to come down because you think you can't afford to buy a home in today's market. But the market is going to do what the market's going to do regardless of what you think is in your best interest. So let's take a look at what the market is telling us. Let's start with the current inventory of homes available for sale. If you take the average number of homes sold in a month and divide it by the number of homes currently listed for sale, you'll get the months of inventory. In other words, if homes sold at the same rate that they have for the last couple of months, how long would it take to sell everything that's currently listed for sale? Almost everybody accepts that the definition of a balanced market is 6 months of available inventory. Anything lower than that tends to favor sellers, and anything higher favors buyers. At a national level, we're currently at about 4 months of inventory, and that is nearly double what it was in 2021. But in the last 25 years, there have only been 7 years when it's been lower, and all of those have been since 2016. This current inventory level is less than half of what it was during the 2008 crash, and this 2.3 months in 2021 is the lowest it's ever been in recorded history. In other words, 3 years ago, inventory was at an historic low, and it's begun to come back to where it was before the ultra-low interest rates and the buyer frenzy during the pandemic. But just because it's risen higher than the historic low, does that mean it's time to start ringing the alarm bells? This is similar to the overreaction of the most recent 4.3% unemployment rate. Yes, it's going up, but when you compare it to where it's been over a longer period than just the last 5 or 6 years, it's still very low. One of the reasons that inventory has been so low is that after the 2008 crash, builders cut back substantially. But as we sit here today, are they really flooding the market with too many homes? Well, if you watch those YouTube videos from the self-proclaimed real estate experts, you might think so. But if you look at the numbers, you'll see that builders are still playing catch-up. There was a huge drop-off after the 2008 crash, but they're still not building as many homes as they were prior to the crash. In fact, they're on track to build the same number of homes in 2024 as they did in 1975. Think about that for a minute. In 1975, there were 215 million people in the United States, and today there's 330 million. That's a 54% increase in the population, but we're building the exact same number of homes. The final thing I want to talk about is foreclosure filings. In 2008, a high number of foreclosures was the primary reason we saw the declines in the home values. So if you're expecting the same kind of thing to happen in today's market, wouldn't you also expect a large number of foreclosures? Well, they're higher than they were during the foreclosure moratorium, but nowhere close to where they were in 08 and 09. So if there is no foreclosure crisis to force sellers to sell for whatever it is they can get, why would they accept a lowball offer? The short answer is they don't have to, and most of them won't, which is why the number of expired and withdrawn listings have been so high over the last few years. And if you don't know, that's when a house is listed for sale and then it's taken off the market and is never sold. What someone perceives as normal is relative to what they're comparing it to. And if you compare this current housing market to anything in the last 5 to 10 years, you are not going to have the most ideal perspective. In today's market, there are no subprime loans that drive a high number of foreclosures. We don't have a massive oversupply of homes or an overproduction of new homes. The pandemic hit before we fully recovered from the 2008 market crash, so we still have not seen normal in over a decade. So maybe what we're talking about is, how would you define a normal housing market? Your answer to that question will have a huge impact on how you interpret the current market. So if there is no housing market crash coming, what can we expect for home prices in the future? Well, if you check out this video, I'm going to break it down and tell you all about it.